Good evening, everybody. Today it will be my fourth lecture series where I have mentioned in my Facebook profile as well as in my YouTube handle and in my LinkedIn profile that I'll be delivering a presentation or a lecture on direct tax amendment which has been done during the presentation of the Union Budget 2026. This is very important to note that there are two aspects of revenue collection of Government of India. One is the direct tax, another one is the indirect tax. Indirect tax actually falls, there are two categories, the GST and the custom duty. So on the first lecture series, I've started with the GST amendments which has been made during the Union Budget of India 2026. Today, I'm going to give you a little bit of picture on the amendments which has been made for the direct taxes 2026. Now, I've already mentioned about the economic survey also during my presentation of the lecture series on the GDP, and the present scenario also gives us a little bit of how the direct tax collection is going up in case of the revenue collection in terms of the Indian economy. Actually, the Indian economy or the Indian economics, the economic survey for 2026, which has projected a real GDP growth rate in the range of 6.8% to 7.2% in the financial year 2026. Now, I've also mentioned in my previous lecture series about the fiscal rate. The fiscal deficit to the GDP ratio is budgeted to fall to 4.3% of the GDP in financial year 2027. That is the budget estimates. Now, we need to understand what is a budget estimate and what is a revised estimate. Before going to the direct tax amendment, this is very important to understand. The budget estimate is that when during the budget which has been placed by the union minister, they actually estimate what is going to the budget for the revenue collection and what will be the expenditure or the planned expenditure is going to happen for the economy. But what happens is this: there is always a possibility of revision of these figures which are actually available during the financial itself, and the figures or the numbers keeps on changing depending upon the economy or the size of the economy is concerned. So the budget, the revised estimates and the budget estimates actually gives us a balance between the fiscal the consolidation and the sustained growth. Now, if you talk about the direct tax amendments which has taken place, mainly on the corporate side, I'm going to start. On the corporate side, there is a major change which has happened in the International Financial Service Center. The tax rate for the units in the International Service Center on the income earned after the tax holiday period will now be taxed at 15% instead of 22% or 30% as applicable to income earned after the tax holiday period. It has been made a changes. There is a little bit of changes in the MAT. We call it minimum alternate tax. On the MAT side, minimum alternate tax, there is a change from 2026 to 27 onwards. The rate has been reduced from 15% to 14%. Now, another very important area for all of us who are actually investing their money in the mutual funds and they're expecting the income from the mutual funds. So, as per the existing provision of the Income Tax Act, the taxpayers are allowed a deduction for the interest expenditure up to 20% of the dividend income while computing the income under the head income from other sources. Now, such deductions shall not be allowed from the tax year 26-27 onwards. Now, inside, if you see the corporate tax picture, the corporate tax where the consideration which has been received on the buyback of shares are now chargeable to tax under the head capital gains instead of being treated as a dividend income. So there will be some changes from the corporate side while preparing the financial statement as well as while preparing the statement of profit and loss account of the company concerned. Now, another very important area in order to understand for the TDS, that is the tax deducted at source. The definition of work under the Income Tax Act or the finance bill which has been introduced has been changed. Now, the definition of work for the payment to resident is amended to clarify that the payment for the supply of manpower would qualify as payment to work, and consequently it will now be subjected to deduction of tax at the rate of 1% is to be paid to individual or HUF or the Hindu undivided family, and 2% in other cases like in firms or in domestic company or in any society or artificial juridical person, and that amendment will take effect from 1st of April 2026. Now, major area of the changes which has taken place in the corporate tax is the area of exempt income. Now, in order to attract the investment, because the main objective of the budget is to attract the investments from the foreign source, and in order to attract the investments in data center and promote artificial intelligence data center framework in India, an exemption will now be provided to foreign companies earning any income by way of procuring the data center services from specified data centers in India up to a tax year of 2046-2047. Means now India will be a hub for the data center as well as artificial data center hub. Now, we all know that Hyderabad has been picked up by some of the major IT companies to start the hub for the data center. So, India is now planning to launch a data center hub, and it will be one of the main attracting investment avenues for India also from in the investment which has been made by the foreign companies. So this is a kind of an impetus which has been given to the foreign companies who are trying to open a store. For example, if Google or Microsoft or Hewlett Packard HP or IBM or Cognizant or Concentrix, any of the companies who are planning to open a data center, and these data centers are actually needs a huge amount of investments in billions of dollars. So the investment will open up for the new avenues for the foreign direct investment as well as in the foreign portfolio investment. There is a little bit of changes in the non-audit cases for the filing of the ITR or the income tax return. The due date for the filing of the return of income by the non-audit business cases, partners of the non-audit firms and trust not requiring audit is extended up to 31st of August following the tax year from the existing time limit for up to 31st of July. The amendment is applicable from the tax year 25-26 onwards. Now, there are many issues like stay of demand in case of corporate tax. There is also a rationalization of the offences and penalties. This is a very high demand from the corporate side, who are always asking or requesting the government of India as well as the finance minister to rationalize the offences and penalties for the corporates, because we need to understand when corporates are investing money in our country, it means that they are generating employment for the country, they are producing jobs for the country. So if you start criminalizing the activities of the corporates, they will not feel encouraged in order to bring the avenues for the new employment opportunities or bring avenues of investment in this country. Now, in order to attract this kind of investments, the corporates, the issue of decriminalization under the Income Tax Act in the nature of offences and penalties should be looked after. And that has been looked after in this budget, and it is a very appreciable budget in that side also. These above changes will immediately take place from the 1st of March 2026 onwards regarding these defaults of offences and penalties. This is the corporate side little bit of introduction I've given. I will continue with the direct tax amendment for the next lecture series also. Then we will go into the personal tax or the individual tax. And this session will be a very interesting one for not only for the corporates, for the practicing advocates, for practicing chartered accountants, for the students community who are having the interest on the direct tax changes are taking place, and it will be also an add-on for those employees who are working in the finance department of across the country in PSU or government or in the private sectors. They will be able to understand that what are the changes have taken place on the corporate tax side as well as the personal tax side. So thank you very much for joining us, and we will deliver our next lecture series soon. Thank you.